In this video, I will be speaking about GBP USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect. At the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous monthly support, which was acting as support all across the zone, which the market broke to the downside here, and at that point was turned resistance here. So what the market is currently testing is a quite strong level of previous monthly support, turned resistance. So what we could expect is a bit of deeper test of the zone before potentially getting rejected to the downside. Dropping down on the weekly, we can see how at the moment the market is currently stuck in a range. We have the top of the range exactly here currently acting as resistance, and we have the bottom of the range here currently acting as support. Now, until the market will remain in between these previous resistance and support levels, we could expect more horizontal price action to be developed. So here on the weekly, we could just expect more horizontal movement. Dropping down on the daily time frame, what do we see now here on the daily? If we actually get a little bit more bullish price action for a test of the high of the range and then a rejection to the downside, that would essentially create an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline. This means that if we do actually get a rejection away from the top of the weekly range and the creation of this M pattern, we would have a good probabilities to see a potential reversal higher at that point for the completion of the M pattern at the neckline, which in this case would be this level here of previous support, which after it gets broken to the downside would become resistance. So if we do get the creation of the M pattern, how we could be approaching this potential reversal higher? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.